So credit tips for the home buying presentation. So you're on your way to purchasing your first new home. And buying a home is a very big step. For most people, that's the largest investment that they ever purchase in their lifetime. So choosing the home and the financing program that's right for you becomes very, very important. So there's various mortgage options that you can look into. And we try to tailor those or select a program that's going to fit within your budget, your lifestyle, and your goals, so that we can make sure that it's a good fit for you and that you can be that happy homeowner once you've found and have purchased your new home. Michelle's going to take the next slide.
So a thing that Jack and I often say to our clients is, if we're not able to get something done for a client when we meet with them the first time, we always say, it's not no, it's just not now. And so that's what we're going to talk about today, is maybe some tips to get you there. So the first place to start is just to know, where are you at? Where is your credit? Where is your income? And so the easiest way to do that is to do a pre-qualification. So a pre-qualification is an estimate of how much of a loan that you can qualify. It's not a firm commitment. And so a pre-approval is a credit commitment from a lender with a specific loan amount, and that approval is valid for 60 days. And so both a pre-qualification and a pre-approval are looking at an individual or a couple, their credit, their debt, and their income. And the piece that we're focusing on today is looking at your credit, seeing where your credit is at. If it's not where it needs to be, it's not no, it's just not now, and how can we get you to that point?
Then the next slide is going to talk about then what is the next step. So to learn more about the home buying process and educate you on the entire process from beginning to end, you would want to ask yourself some key questions. And one of the first questions you should be asking yourself is, am I credit ready? Am I ready to make this biggest purchase of my life? So we would want you to put together your own home team of experts that can assist you in that home buying process, which would be a knowledgeable loan officer. So again, we can tailor you and get you into the right program that's not only going to be right for you today, but for the rest of your home ownership of that home and with that loan. And always an experienced real estate agent or a builder on your home team is the next best thing. So between your loan officer and your real estate agent, you have all the expertise that you need to help you get through this project. So the next thing that you would want to ask yourself, and I think, Michelle, you're going to talk about this, but is, how much of a home can I afford to get?
So that next slide. So how much of a home can I afford? So very, very big piece of that is your credit. So we don't want you out looking at homes that you can't qualify for. We don't want you to get your hopes up on something that, you know, will just be a disappointment, that you're looking within your price range. So we look at, as lenders, we look at your credit history. So it's not just the score itself. There's lots of pieces that go to the credit. Your available cash down for your down payment and your closing costs. We look at your income. We also look at how long you've been at your job. So it's not just that, you know, hey, I've got this great job. I make this much per hour. I get 40 hours a week. We need to know how long you've been at that employer. And if you haven't been at the same employer, have you at least had employment for the last 2 years, consistent employment? And then we also look at your existing debts and your other financial obligations. So of course, when you meet with a professional, when you meet with your lender, you can talk a little bit more in detail about those requirements.
Okay, on the next slide, it's going to talk about how important is my credit. So one of the things that we're looking for is going to be the history of your monthly payments. Have they been on time? So what we're really looking for is not only do you have the ability to make the payments, but are you willing to make the payments? Some people will have a job and they have all the income coming in, but do they necessarily make those payments on time each month? And that is an important history of your credit that tells any creditor out there, what does your past look like and what does it look like today? And they go back from the start of time of your credit. So they're looking at a big, long history sometimes, and not just necessarily what is happening today. The credit score, which is otherwise known as a FICO score, the credit score can be a factor of the kind of mortgage program which you would qualify for. So depending on what your credit score is, we can then tailor a program that you would be eligible for. An example there is if you have a 720 or above credit score, there's a ton of different programs out there, whether it be governmental programs, conventional programs, that would allow you to get a mortgage with that credit score. If our credit score is the mid 600s, then we would be looking at some of the governmental programs that will allow that. So that FICO score, that credit score, can be the factor in which kind of mortgage you would be looking for to qualify for. Your credit history can also affect the amount required for your down payment. Again, if we're looking at a conventional loan, if your credit score is 720 or above, you could be looking for as little as 3% down, 5% down, or you could go as high as you wanted to at 10, 20%. You can do whatever you want. If that credit history is lower and you're in the mid 600s and we're looking at the government programs, well, then that may allow you to get a loan at 3.5% down, or in some cases even 0 down. So the credit score is what's going to help us tailor that loan program to what your needs are. It'll also tell us the amount of money that you can borrow in relation to what your income is. It's called debt to income. And we just simply know that in most programs, 43 to 45% of your gross monthly income is what they're targeting. And so we're looking to see what you can afford in purchasing that home. And the interest rate that you're offered is also affected by the credit score in which you have. So that sometimes allows us to tailor a program to get you the best program and the best rates available to you for what you qualify for. If you haven't already obtained a copy of your credit report, you can get once a year a free credit report sent to you. And on the screen there, we've got the website there, the annualcreditreport.com will allow you to look at what that looks like. So if there's ever any question before you've even spoken to a lender, you have the ability to check that out ahead of time and know what you're talking about when you do place that call to your lender.
And I just wanted to mention on that annualcreditreport.com, that is your credit history. That isn't your credit score. So the reason it's free is that you can pull just the history. So if you wanted to get your actual score from annualcreditreport.com, you can, but you're going to pay a fee for the score. You can get that free for the history up to 3 times a year, and that is pulling through TransUnion is one, Equifax is the second, and then Experian is the third. And if you're not capable of using, to do it online at the website, they do have a phone number available, and then you can also write them a letter. I think we have some handouts that we're going to send out after the call, and that is covered in there, different ways to obtain that. So that is a great resource to find out. A lot of people are, very conscious of like, I want to know my score. And sometimes in the very beginning, maybe that's not really that important to know the score. It's just to know what's out on your credit and get that cleaned up, and then, go and look at your score. So this slide is to establish or improve your credit history. So of course, maintain or improve payment habits. So making those payments on time. It can be, very damaging, to someone who maybe is just starting out or newly reestablished credit, to have just even one late payment can really hit your credit score and bring it down. Those will report on your credit history for 7 years, late payments, collections, charge-offs, those type of things. So when you get a copy of your credit report, review it for mistakes and report errors. There are things that report on credit reports that are not accurate. I've often seen, father and son with the same name, even junior, senior, and somehow senior's information has shown up on junior's credit report. So check it for errors, Or if you've made payments on collections, a lot of us get medical collections. That happens to a lot of people. And you make that payment and you pay that off. And now it's still reporting that that collection's out there. It's really important to review for mistakes. And then when you do make a payment on something that you've had a collection on, keep all the history to that. Document the date that you talked to the collection company, who you spoke with, and then any receipts that you get, any email confirmations that you get back, because that will help you when you go back to argue a mistake or an error. You've got that documentation. Keep your balances low on your credit cards. So the rule of thumb is to have no more than 30% of your credit limit extended. So if you have $1,000 credit limit on a credit card, don't extend more than 300 if at all possible. Now, if you go over the 300, is that going to cause your score to be an awful score? Well, no, it's not. But it's just one of the pieces. It's part of the pie that where they're scoring you on. That's one piece of the pie. So if you can keep, your balances lower, if you can pay them off each month in a perfect world, then that's what your goal is, especially if you're trying to get your credit score where you can buy a home. That's something you'll want to try to keep low. Try to pay off all outstanding loans or credit card debts to reduce your total debt. So just like I was saying, pay them off each month. Avoid taking new credit unless you can pay off the balances each month. And then what I would say on that is when I talk to a client who's coming in and maybe they're not ready, or even maybe that they are ready, I'll say, at this point, don't go out and open when you go to Walmart and they say, would you like to open to save, 20% today, or Kohl's or Target? Just the answer is no. Don't go out and open those because that can be hurtful to your credit to have multiple pulls on your credit. And then this one is the kind of a touchy one. Consider closing some credit card accounts. I would say to anyone who's having trouble keeping their balances low, and maybe they have too much credit extended, this might be a really great idea. This might be something in the very beginning that you're going to say, in order to improve my credit and to save some money, I'm going to close some of these accounts. But when we talked about maintaining the outstanding, what do I want to say this? Keeping your loan balances low on, keeping your balances low on credit cards, where that 30% of the credit limit isn't extended. If you have 3 or 4 credit cards and you shut one down, that overall credit limit now has been decreased, and your 30% might be affected to that total credit limit that you have outstanding. So I'd be very cautious on that. So, that would be something to discuss with a financial person, a lender, and discuss which ones might be good to shut down and which ones might not be. And if you have no established credit history or less than perfect credit, there are loan programs that can help you buy a home. So there are programs that can look at alternative trade lines. So if you've never established any credit, maybe we could look at rental history. We could look at utilities. We could look at some types of insurance, like renter's insurance or auto insurance. So that is a possibility. It's a little bit more work to do that. If you haven't established a credit history, there are programs, at local institutions, at your financial institutions, talk to your local bank or credit union. They do have programs that help you establish credit if you've never had credit.
Good. The other thing that I think of too, Michelle, on closing additional credit lines is you don't want to pay off everything so that you cannot show a credit history. So sometimes people get into trouble with their credit and then they start paying off their debts. And as they pay them off, they close everything. And then they no longer have the ability to show a credit history. So if you're repairing your credit, it's great to pay those down and even pay those off. The idea is to use them frequently and pay them off frequently so that you can continue to show a credit history without necessarily going, too far in debt. On the next screen, we're going to talk about just quick estimates and scoring. So what I need everyone to understand, and I saw one of the questions beep up on the screen there about Credit Karma and stuff. So every lender is going to pull all three bureaus and then use that middle score as your average. So if you have a 740 and you have a 721 and you have a 700, that 721 would be the score that we would use to qualify you for the loan and to give you the best rate and program available. And so a lot of times people will go out and they will look at Credit Karma, or gosh, everybody gives them a credit score. Discover puts it on their statements. State Farm puts it on their statements and stuff. So everyone is showing you what they believe your credit score is. And sometimes those can be very accurate and sometimes they're nowhere close. And so the thing to remember is you don't know which score they are pulling. If I'm looking at your middle score and it's TransUnion, but they're looking at Equifax and I'm telling you your score is 721 and they're telling you it's 681. Or they're telling you it's 750, but your middle score is 710. So we don't really know when you're comparing Credit Karma or any of the other programs that are out there, how that's going to compare when you have a lender that's going to pull all three bureaus and use the middle one. So sometimes that information is very accurate and sometimes it can be completely different. The next screen is going to talk about your down payments, and little to no money down is credit driven. So today there's a lot of mortgage programs that are out there and available to you that make down payments less of a challenge. We have programs that are 0 down, 3% down, 3.5% down, 5%, 10, 20. It goes up from there. But those are all going to be credit driven. So some homeowners may also be eligible for down payment assistance programs, and those are out there and based on your credit as well. You may be able to buy a home with very little or no payment down if your credit score is at a certain level. So there's just so many different programs out there that we would want to be able to tell you what all of your options are. You know, once we've pulled your credit and we know what your score is, it helps us to better tailor that program. Loans with down payments of less than 20% typically are going to require mortgage insurance, which is an insurance that is taken out for the lender, so that if you're putting less than 20% down, if you were defaulting on that loan later, you know, we would then have insurance to help cover that payment. And so if you can put 20% or more down, you don't have the mortgage insurance on that program. That gets added, that mortgage insurance will just get added right into your monthly mortgage payment. So it becomes a part of your mortgage, your monthly mortgage payment. So they also, a lot of times mortgage programs are going to require funds to be left in reserves. So they're going to want to make sure that you've got 1 or 2 months reserves left in the bank after the purchase is done. The last thing we want to do is use every penny you have to get you into the home, and then you have problems making that first or second payment, or you're not able to fix the things or paint the room that you wanted to paint. So sometimes there are reserve requirements that we want left in your bank account after the purchase is done. And that just depends on the different programs that are out there and available. Next slide.
So some of the financing available, conventional loans, which are not backed by the government. You'll hear the names Fannie Mae, Freddie Mac, that's conventional loan financing. Those are the investors. And those suit the needs of both first-time home buyers and those ready for their second home, their retirement home, their second home. Types of conventional loans include a conforming, and all conforming means is it anything less than $510,400. Anything over that $510,400 is considered a jumbo loan.
The next slide is going to then talk about government loans. Do you want to cover that, Michelle?
Yep, government loans are backed by the federal or state agencies. So in general, they answer the needs of first-time home buyers. So they offer flexible credit guidelines. They allow for smaller or no down payments. And the type of government loans that we're talking about are FHA, rural development, state bond programs, which you've probably heard of MSHDA, or if you haven't heard of MSHDA, it's the Michigan State Housing Development Authority, and even Veteran Affairs. These programs might require a home buyer education. And so even though they might have a little bit more flexibility when it comes to the credit guidelines, they're going to be a little bit more strict when it comes to the housing condition. So conventional financing, you may be able to get away with a little bit more when it comes to the condition of the home, where they may not be as picky. But when it comes to the government type financing, they're going to, be critical when it comes to peeling paint, maybe curling shingles, water spots on the ceiling, hand railings that are missing from, stairways, steps and that type of thing. And so what's important to know about that, why are we talking about this when we're talking about credit, is depending on what you're trying to finance, the higher that you can get your score, the more options that you have available, like Jack had mentioned before, where, you may find homes that you go out and look at won't qualify for some of the government programs that it'll say that right in the listing, not eligible for FHA or VA.
That's where having your home loan team is going to help as well, because your lender and your real estate agent will work together to make sure that they know what type of a home you're looking for and what program you're going to be using, so that they can show you the right houses when you get out there. So again, having established that team in the beginning is a good thing. On the next slide, we're going to just touch for a second on what I can expect, what you would need to expect at the time of application, just so you have in your mind what types of documents we get this information from. So the last 2 years W-2 forms are going to show us what that income history has been. Your pay stubs today for the last 30 days is going to tell us what that income history is today. So again, we can look and see if there's been any changes in the last 2 years, and what it is up to today. They'll look at your bank statements for the last 60 days. And again, that's to show if there's going to be any reserves left over when it's done, or if you have the funds available to make the purchase. Of course, if you already have a purchase agreement, we will need that as well. We will be able to get off the credit report a list of your outstanding debts, but we may need to obtain some additional information from you on those. If it's not accurate on the credit report, or if it's not complete on the credit report, we would then ask for some more. And then sometimes some of the programs, especially the government programs, will actually ask for the tax returns from the last 2 years. And if you're self-employed, it would require having your schedules and K-1s to go with that. And then they will also always like to see either a mortgage history or a landlord's verification of rent from a landlord, just to again show that the housing history has been strong and something that isn't going to have any effect. If you've got a landlord and a rental history, that's not going to show up on your credit report. So they'll send a letter to them asking for a verification of rent to just show that you're not behind and you're on time. Next screen.
I want to mention on the documents that we ask. So when I ask client A to client B, I ask for the same documents from every client. So what we're asking for isn't to pick on anyone or say, we're going to ask more from you than the other. There might be some, circumstances where I might ask from a self-employed borrower, not just their personal tax returns, but their business tax returns. And so when I have clients very often come to me say, I only have a 2018 tax return, I didn't file 2019, is that a problem? Yes, because that's the information that we look for. Really important just to know that, that we ask for that information because we do provide it to an underwriter who will review it, and then we'll have to follow the guidelines of whatever program that's being used, conventional or government. And so just to continue, what can you expect on an application is to confirm the down payment and the closing cost amounts are in your bank or other assets. Do you have it in a 401k? Is it something that you can actually pull from? Are you going to get a gift? Gifts are possible from a family member. So if we can document that, that may be an acceptable source. Clarify any incorrect items on your credit report. This is where, when we're talking about credit repair, you'd really like to have those credit issues repaired prior to you starting your financing. You'd like to have already done your annual credit report.com, already been working with a financial professional to find out where your credit was, to clean up any of those errors. So you are getting the best interest rate and the best product that you can to buy your new home. And then verify that you have debts that are not listed on your credit report. So this information, you know, obviously we want you to provide to us if you have something that you pay each month that should be showing on your credit report, but for some reason doesn't. You know, a lot of times we'll find that when we're looking through your bank statement, and for some reason it shows that you pay Kohl's every month $30, and we don't have that on your credit report. So that's what we mean by verifying debts that are not listed on your credit report.
And we wanted to touch on the next slide there, just about employment income and how that could differ. So your employment for the last 2 years, we don't have to have 2 years with the same employer, but we like to look at 2 full years of employment history to see if there's any gaps that we need to explain. But again, that can be multiple employers, or it could be schooling or training, or maybe you were in the military and as you came out, then you got your job. So maybe you've only been on your job for 6 or 9 months, but you know, if you were in the military before that or in school and stuff, we can put together that 2-year history. Borrowers with variable income typically will work, you know, seasonal or something like that. And as long as we can have a 2-year history there, then we can look at what other documentation we need to have to be able to provide to the underwriter to prove that 2-year history. So whether it be tax returns, your W-2s, it might be awards letters from Social Security, retirement statements, any of that stuff may be called upon in order to be able to show that 2 full-year history. And then on the next screen there, it just talks about, we'll walk you through all of that. So a lot of times we ask a lot of questions in the very beginning, but the more answers we can get from you, the easier it is for us to be able to gear which program is going to be best for you and what type of documentation you'll need to provide. Next screen.
Again, you know, just to kind of go over, talk to prospective lenders, you know, find who you're comfortable with. You may not be comfortable with the first lender that you talk to. Just, it's a long process. It's probably going to be one of the most stressful things that you do your entire life. You know, and each time you do it, it probably is going to get a little bit more difficult because the government is involved. And so there's a lot of pieces to it. I know I have people ask me every day, why are you asking me for all of this information? And the reason that we ask for it is we ask for it from all borrowers, and we're, you know, we're just having to meet the investors' guidelines. So, you know, talk to the different lenders about what is the pre-approval process. You know, what does that tell me? What will that tell my realtor? What is the pre-qualification program? Get a copy of your credit report. Annualcreditreport.com isn't the only way, but I feel like that it's free and it's the most accurate. And I've always been very successful with that. There is Credit Karma. I think I saw a question pop up about Credit Karma. Credit Karma is also a great resource. That one does give you a score. However, it's not your actual score. It's not the same scoring system. It's not FICO that's being used. And that's the reason that you don't get charged a fee for them to pull your credit score. So get a copy of your credit report. And then, you know, discuss down payment and closing cost options. The greatest thing is if you're a first-time home buyer, if you can get a program that can help you with low to no down payment, and the better your score is, the more options it opens up for you.
So Amanda, let's look at some of those questions in the chat box because I saw them popping up.
Yes, Carmen had a slew of them, and I am so grateful for those because chances are if you had a question, then somebody else has the same question. So thank you. It looks like it says we are eligible for a VA home loan. How does this change everything for us? And then another follow-up question is it true the down payment for VA loans is 0? Could you guys talk a little bit more about the VA loans?
Yeah, absolutely. I love doing VA loans, and we do a lot of those in Battle Creek because of the center there. But the nice thing about a VA loan is it is zero down. It doesn't have to be zero down, but it can be. And that is the only program out there that is a zero down loan, meaning less than 20% down, where you're not charged mortgage insurance. You can also ask your seller to contribute up to 4% of the purchase price going towards your closing costs and fees. So most of my veterans or my service people, they go into a VA loan with zero down, no mortgage insurance, and then they use their money for the down payment, or I'm sorry, they use their money for the closing costs, or they ask the seller to do that. So it's a great program. Most of my veterans get into homes for as little as $500 or $700 out of their pocket, and some get money back at closing. So it's a great program out there.
Another nice thing with the VA loan is if there's a funding fee that can go along with the VA home loan. If the veteran is exempt from that, they won't have that extra funding fee. And that funding fee, if they're not exempt from it, will just be made part of their loan. So it's not like it's extra money that they need to bring in. And then as far as if they're eligible, I have a lot of people say, well, I don't know if I'm eligible. And the great thing is we can do that piece for them. I think most lenders can do that. All we need is their DD 214. So D as in David, DD 214. If they provide that to us, we can order their certificate of eligibility, and that will tell us what they're eligible for. And then it will also tell us if they're exempt from that funding fee. Another nice feature of the VA loan is it is not one and done. It doesn't mean because you've had one VA loan that you can't have another VA loan. It doesn't mean that you couldn't potentially have two at the same time. So that's a little bit more intricate. But there are a lot of veterans out there that don't use this because they think VA and they think, oh, I'm just not even going to touch that. It is a great program. It's one of those nice things that really does a lot for the veteran.
That's good.
All right.
Yep, go ahead.
So the next question, I actually have a follow-up question because you guys had mentioned Credit Karma and that the score that you get from Credit Karma or similar entities doesn't give you your true credit, your FICO credit score, which is what lenders use to determine eligibility for loan products. Where did they come up with this number? They just pull it out of the sky or what?
Well, the problem with that is the fact that we don't know where they're pulling that number from. They have their own formula to arrive at that number so that they're using the same system for all the information that they give to every person out there. But it's not the Fair Isaac credit reporting, the FICO, that all of the lenders are using out there. And that's why sometimes it could be very accurate and sometimes it's completely different. Unfortunately, each one is using their own formula, so you can't really, say where they're getting that number from. And it'll be different. Every statement I get has a different number on there, so.
Credit Karma uses a scoring system called Advantage that tried to come onto the market to compete with FICO and just never really took off. So their scoring system, I believe, goes like from a 400 to a 950. So that's why a lot of people will say, well, my score is here. And then when they come in to see me, it's similar, but it's off just that amount. But then I've seen no rhyme or reason to it on other occasions, but it's just a different scoring system.
So the next question is it true and is it legal for credit bureaus or businesses to sell debt?
So it's not the credit bureau that is selling your debt. When someone sells your debt off, if it's sold to a collection agency, if you haven't made that payment after whatever the required amount of time is, usually 3 months, to that creditor, they will sell that off to a collection agency to collect it. And sometimes people will look at the credit report with us and they'll think, oh, I'm going to go back to Best Buy and I'll pay that debt. Well, if they've sold that debt off to a collection agency, they no longer can make that right with you, that you have to go through the collection agency to correct that past due amount. And then they're paying Best Buy or whoever the creditor is, whatever portion they're willing to pay them to be able to take on trying to collect that debt from you. So the credit bureaus themselves are not doing it. They're just the reporting agency that tells you that it's happened.
And I would say anyone who comes to me and they have a credit report filled with multiple collections, I'm not a credit counselor. I am a mortgage lender. I know a little bit to be dangerous and enough to get them down the right path, but there are a lot of local nonprofits that have credit counselors, and that's what they work on. And so if I meet a client who has a list of collections, after I give them a plan of what I think would be their best way to get started, I would probably recommend that they meet with a reputable credit counselor and definitely talk to your financial experts in this, because there are quite a few predatory type companies out there that will take your money and then not help you at all. But there are some very great local nonprofits with credit counselors that will look at what you've got on your credit report. And some of those collections, like I said, will fall off. In the beginning, I said will fall off within 7 years. If some of those are very close to that, you may not want to reach out and call every collection on your credit report and say, hey, here I am, here's how to contact me. You want to make sure you're making, the best plan possible.
So speaking of credit history and having things fall off your credit report, what happens if it's over 7 years and somebody pulls their credit report and that debt is still on there even though you've paid it off? What do you do?
There are some things that will not fall off after 7 years. So things like that are going to be foreclosures, bankruptcies. But if it is truly a collection that hasn't fallen off in 7 years, I would say you could dispute it. It might be considered an error. Or like I was mentioning, if you reach out and contact them, that 7 year starts again. So if it's been on there 6 years, 6 months, and on the 6 year, 6 month you contact them, it starts that clock all over again. So it's why it's really good to just, get the professionals to work with you to make sure you're doing all the right things.
So when you say that there are nonprofits out there that'll help individuals repair their credit, what if somebody was approached by a company saying, hey, for $200 a month or whatever it might be, I will fix your credit and get you to a 720 credit score?
Run.
Yeah, I would say run as well. So the one thing that a lot of times people misunderstand about credit counseling when there is a fee involved is that is per correction per bureau. So if they tell you it's going to be $150 to correct that one issue, if that was reported to 3 different bureaus, it's $150 times 3. So all of a sudden you're looking at a $500 credit counseling bill for that one issue. And so you have to be very, very careful and understand when you get involved with a credit counseling, what is it going to cost you and what are they going to do for you? And Amanda's right. There's a lot of companies out there that will be happy to help you for a fee. So you have to be very careful to make sure that you're talking to a reputable counselor. And there are plenty of them out there. So you just have to know who you're talking to.
And technically, individuals can dispute their credit, any kind of credit inaccuracies themselves, correct?
Correct.
They don't necessarily need to hire anybody to do that. Although it helps to have free good guidance.
Yeah.
If I would say reach out to the credit reporting agencies to talk about what's on your collections versus maybe calling the collection company directly. They could answer more of your questions if you weren't going to maybe potentially use a financial expert or a credit counselor.
Okay. So the next question is about the 3 credit bureaus and their scores. I know you guys had talked about the average of the scores. The question is, So I guess, you know, these aren't averaged, which you've already said that. Why aren't they averaged, and why are scores different, maybe?
Yeah, so each one of the bureaus has their own reporting system, and not every creditor reports to all 3 bureaus. And so if you have 5 credit references on your credit report and they all 5 have reported to all 3 bureaus, your scores are all 3 going to be pretty close. But if 3 out of 5 of those only reported to 2 out of the 3 bureaus, one of those bureaus will have a completely different score. So they don't average together. We pull all 3 and we take the middle one of the 3 as your average score, and that's what we base everything on. And if they if that generally is TransUnion, but I have seen it be something other than TransUnion, but typically TransUnion is the middle score. So that they're not an average between the 3. We just take the middle one as your average.
And if there's more than one borrower, we're going to take the lower of the 2, the median score for both, and then the lower of the 2.
Okay. So VA loans do not require mortgage insurance, correct?
Correct. That is correct. Yep.
Okay. The next question is about, oh, Talia, do you have something?
They don't require mortgage insurance, but then there's the VA premium that gets added onto the loan and is there for the entire 30 years. It doesn't fall off.
There is a funding fee that the VA charges for doing the loan and, you know, not having any money down and not having mortgage insurance. It does get rolled into the loan over the life of the loan. You're correct. But you don't have to roll it into your loan. You can pay cash for that funding fee if you want to, or if the veteran was disabled during the line of work or due to the line of work, that funding fee is exempt. So that is all on their certificate of eligibility, and we pull it right off of there to know if they have to pay the fee or not. And then if they do, we would always ask if they want it rolled into the loan or not.
All right, the next question is, where are the homeowner education classes in Battle Creek? And I will take the first stab at that. Neighborhoods Inc. used to provide home buyer classes, but I don't believe they provide them any longer. So this is our attempt at trying to connect with people in our community to try to talk about credit issues and home buying workshops. But I know Neighborhoods Inc. had a more comprehensive and longer program. There is some work going on in the community to see what we can do to provide more comprehensive classes. Michelle, do you have anything else to add?
Yeah, so same like you're saying, when I first started here 3 years ago, I was linked with Neighborhood Inc., sending my clients there. They had a great program. So they've gone through some conversion, some, new leadership. And so I send a lot of my clients to Kalamazoo Neighborhood Housing Services, also known as KNHS. You don't have to live in Kalamazoo. You don't have to go to Kalamazoo. You can talk with them over the phone. You can work with them online. So they do offer the home buyer education course that when in the PowerPoint where we were talking that some of these programs might require that home buyer education piece. They will provide that. And they also have credit counselors. And they are a nonprofit, and their mission statement is to provide resources to the residents of Michigan to become home buyer ready. And then as well, Green Path. Green Path is also a nonprofit, and they are totally online or over the phone, where KNHS, when we're not dealing with COVID, you could go to visit with them face to face.
And there are some programs that have online programs as well. Frameworks is one where you can just do it online as well. So there's different places out there that you can obtain it. And KNHS is Kalamazoo Neighborhood
Housing Services.
Housing Services, yeah, okay.
Okay, so the next question is, there are a husband and wife that are both disabled, and he is an Army veteran. How do you feel about those aspects of an application?
That we see all different types of cases. We see only Social Security income or disability income. That's quite common. So if it is a client who is a veteran, obviously the first thing we want to look at is if they are eligible for VA financing. If the disability stems from their service, they could be exempt from that funding fee. And so, you know, it doesn't provide any hurdles. I mean, it would be looked at like any other loan.
How much is that funding fee normally for the VA loans?
Percentage of their loan amount. So if they've never used it, it could potentially be as high as 3.6% of the loan amount.
Okay. Have you ever heard of net debt?
I haven't.
No, I have not.
Carmen, do you know what is net debt?
Does it have to do with student loans?
No, it's
Okay.
this my father who's elderly, has went through them to consolidate his debt, and I was just wondering if it was a credible organization or not.
Yeah, I've not heard of them before.
Okay.
All right, I think I've hit all of the questions in the chat. Does anyone else have any other questions? James, Sharon, I see you guys. Well, I see your names. I don't see your faces. Hazel joined us a little bit later. Thanks for joining us, Hazel. Does anyone else have any questions for Jack and Michelle?
No.
Oh, Talia.
I just wanted to say that I thought Michelle and Jack did a great job, and thanks so much. It was very well done.
Thank you.
I agree.
Great. Well, our next workshop is next week on Tuesday, July 28th at 5:30. You have to register in order to attend because we will send you all of the Zoom links. After, probably tomorrow morning, I will be sending out a follow-up email with some information that Jack and Michelle emailed to me to send to all of you. And then I will also link to you a Battle Career or First Time Home Buyers home buying book that was created right here in Battle Creek. There's step-by-step information on how to buy a home. We tried to make it as comprehensive but not really long so that nobody would read it. And I am happy to report that it is all Battle Creek based. The people in the book are all from Battle Creek. The homes are all from Battle Creek. And so it is truly a Battle Creek centered piece. So I think that is it.
Thank you.
Thank you, everyone, for attending.
Thanks, Jack. Thanks, Michelle. Thanks, everyone.